In today's video, we're going to walk through the core Danish VAT rules that every freelancer and independent professional should understand if you operate in Denmark, invoice Danish clients, or sell services across borders. The objective is not to turn you into a tax specialist, but to give you a clear, practical framework so you can make informed decisions, avoid common mistakes, and know when to seek professional advice. Let's start with the basics. In Denmark, VAT, moms, in Danish, is generally applied at 25% on most goods and services. If you are genuinely carrying out independent economic activity as a freelancer, the tax authorities will typically regard you as running a business, even if you are a one-person operation. That business is, in principle, subject to VAT when your taxable turnover exceeds a relatively low threshold, so it's important to check current thresholds with skat.dk or your advisor, because they can change and special rules can apply. As a freelancer, your first step is to clarify whether you need to be VAT registered. If your annual taxable revenue is expected to be above the registration threshold, you must register for VAT before you start charging it on your invoices. The registration process is handled digitally through the Danish Business Authorities portal, where you register as a sole proprietor, an enkeltmandsvirksomhed, or another legal form if relevant. Once registered, you're assigned a CVR number, which is your business ID, and your activity becomes visible to the tax authorities. From a practical standpoint, VAT registration means two things. First, you must charge VAT on most of your invoices. Second, you're allowed to deduct VAT on eligible business expenses. For many freelancers, this deduction is a key benefit. When you purchase equipment, software subscriptions, or certain professional services for your business, the VAT you pay can generally be offset against the VAT you collect from clients, subject to specific limitations. To manage this correctly, you need to maintain robust documentation. Every invoice you issue must meet Danish requirements. It should include your business name, address, and CVR number, the client's name and address, an invoice date and a unique invoice number, a clear description of the service provided, the fee excluding VAT, the VAT amount, and the total amount including VAT. If you are zero rating a service or not charging VAT for a specific reason, this should be clearly stated on the invoice, along with the legal basis when applicable. On the expense side, you must keep all purchase invoices and receipts that show the seller's information, their CVR number if Danish, the VAT amount, and what was purchased. These documents form the backbone of your VAT accounting and must be kept for a statutory retention period, typically 5 years, in case of audit. Once you are VAT registered, you also commit to filing VAT returns on a periodic basis, usually quarterly for smaller businesses, though frequency can change as your turnover grows. In each period, you calculate the VAT you have collected from your clients and subtract the VAT you have paid on eligible business expenses. If the result is positive, you pay that amount to the tax authorities. If it's negative, you may be entitled to a refund. Filing deadlines and payment dates are strict. Late filings or payments can trigger penalties and interest, so it's advisable to set up a simple calendar or automated reminders and, where possible, use accounting software that integrates with Danish tax systems. An important dimension for many freelancers is cross-border work. If your clients are outside Denmark, the VAT treatment depends on where the client is established and whether they are a business or a private consumer. For business clients in other EU member states, the general rule for services is that VAT is due where the customer is established. In practice, this often means you don't charge Danish VAT if the client has a valid EU VAT number and you state the appropriate reverse charge wording on your invoice. Instead, the client accounts for VAT in their country. However, you must report these cross-border supplies in the EU sales listing if required and keep evidence of the client's VAT status. For non-EU business clients, many professional services are treated similarly. You may not charge Danish VAT, but the exact rules depend on the type of service, so it's prudent to verify the place of supply rules for your specific activity. When working with private consumers in other countries, including the EU, the rules can be more nuanced, particularly for digital services, online courses, or electronically supplied content. In some cases, special schemes or thresholds apply, and you may need to account for VAT in the customer's country under EU-wide regimes. This is an area where upfront clarification can prevent costly compliance issues later. Within Denmark, Be conscious of whether your specific field falls under any VAT exemptions. Certain activities, such as some healthcare, education, or financial services, can be exempt from VAT. While exemption might sound attractive, it also means you cannot deduct input VAT on related expenses, which can significantly affect your cost structure. The classification of your services should therefore be reviewed carefully, because misclassifying VAT-exempt services as taxable, or the reverse, can trigger reassessments and penalties. Another practical consideration is mixed-use expenses. As a freelancer, it's common to use the same assets, like a home office, phone, or car, for both business and private purposes. Danish rules typically require you to allocate VAT deductions based on business use, not total use. For example, if your mobile phone is used 70% for client calls and 30% privately, only 70% of the VAT on the subscription is normally deductible. Conducting a reasonable, well-documented allocation, rather than guessing, helps demonstrate good faith and reduces risk in the event of a review. Many independent professionals also work with platforms or agencies. If you are engaged via a Danish or foreign intermediary, pay attention to the contractual setup. Are you invoicing the platform, or the end client? Is the platform treating you as a subcontractor or as an employee-like resource? The VAT implications can vary. In some models, the platform collects payments, charges VAT to the client, and then pays you a net amount. In others, you must invoice the end client directly and account for VAT yourself. Having clarity on who is the supplier of record and who is responsible for VAT is essential to avoid double taxation or gaps in compliance. From a risk management perspective, keeping your VAT approach simple and consistent is often more effective than trying to optimize every edge case. Use a basic, well-structured chart of accounts. Separate your domestic, EU, and non-EU revenues. Track vatable and non-vatable expenses distinctly. When you make a change in your business model, for example, launching an online course, starting to sell to consumers abroad, or adding a new type of advisory service, assess whether the VAT treatment needs to change as well. If in doubt, obtain written guidance from a qualified advisor or, where possible, from the tax authorities, and retain that correspondence with your records. It's also important to distinguish VAT from income tax and social contributions. VAT is a consumption tax that you collect on behalf of the state. It is not your income. When you receive a payment that includes VAT, a portion of that amount effectively belongs to the tax authorities from the moment it hits your account. Treating that portion as untouchable, by, for example, moving it into a separate savings account, can make your cash flow more predictable and reduce the risk of liquidity issues when VAT payments fall due. Finally, recognize that VAT rules evolve. Thresholds, digital reporting requirements, and cross-border rules within the EU are all subject to periodic change. As a freelancer or independent professional, you do not need to monitor every legislative detail, but you do need a mechanism for staying current on the changes that directly affect you. This could be as simple as subscribing to updates from scat.dk, using a reputable accounting system that adapts to regulatory changes, or having a standing arrangement with a bookkeeper who reviews your VAT position at least annually. In summary, Danish VAT for freelancers revolves around a handful of core principles. Register when your activity and turnover require it. Issue compliant invoices, maintain proper documentation, file and pay VAT on time. Understand the specific rules for your type of services and your client base, especially when working cross-border, and take a disciplined approach to differentiating between business and private use. By getting these fundamentals right, you not only stay on the right side of the law, but you also create a more transparent, professional, and scalable foundation for your independent practice.